The market is currently closed, and as of the final bell on Friday, December 5th, Rezolve.Ai plc, trading under the ticker symbol RZLV, is sitting at exactly 2.79 USD. We saw a downward slide of negative $0.14, representing a 4.78% drop during the regular session, though the after-hours tape is telling a slightly different story with a rebound of roughly 2.87%. If you are looking at the chart right now, you are seeing a stock that is battling a massive disconnect between its narrative and its price action. When you see a ticker like RZLV sitting at 2.79, down nearly 5% on the day, the immediate expectation is that this is just another small-cap tech stock getting crushed by interest rates or a lack of news. The expectation is that this is a dead money trade, a company that came public and is now drifting into obscurity. But the reality, the deep, uncomfortable reality that most retail investors are missing, is that Rezolve.Ai is currently sitting at the center of one of the most aggressive institutional battles we have seen in the AI commerce sector this quarter. This isn't just a stock dropping 14 cents. This is a company that has secured Tier 1 partnerships with Google and Microsoft, yet the market is pricing it like a distressed asset. That gap, that violent separation between the fundamental news flow and the technical price action, is where the real story lives. You are not looking at a simple sell-off. You are looking at a market that is fundamentally mispricing the execution risk of a company that is trying to rewrite the rules of mobile commerce. Let's strip away the noise and look at the tape. The stock opened at 2.92, touched a high of 2.93, and then spent the entire session bleeding out to a low of 2.73 before settling at 2.79. That kind of price action, a stair-step decline where every minor rally gets sold into, usually indicates a specific type of selling pressure. It is not panic selling. Panic selling is vertical. This is controlled distribution, or more likely, short side pressure that is methodically capping the upside. The 52-week range paints an even more volatile picture, a low of 1.07 and a high of 8.45. We are currently trading closer to the bottom of that range than the top, despite the fact that the fundamental backdrop of the company has arguably never been stronger. This is the tension. Investors expect that good news equals stock up. The reality is that in the current algorithmic trading environment, good news often provides the liquidity for institutional holders to exit or for short sellers to reload their positions, creating a counterintuitive price drop that shakes out the weak hands. When we talk about Rezolve.Ai, we need to understand what they actually do, because AI is a buzzword that gets thrown around too loosely. Rezolve is not building a generic chatbot. They are building the infrastructure for conversational commerce. Their flagship offering, the Brain Suite, essentially turns passive retail browsing into an active, intelligent conversation. Imagine interacting with an online store not by clicking filters, but by talking to it like a human sales assistant that knows the inventory, understands your context, and can execute the checkout instantly. This is the holy grail of e-commerce, reducing friction. The Brainpower large language model is their proprietary engine designed specifically for this retail context. The expectation here is that since everyone is moving to AI, Rezolve is just one of many. The reality is that their partnerships suggest they might be the chosen one for the big infrastructure players. This brings us to the recent movement and the Google Cloud factor. When a company with a market cap under $1 billion announces that Google Cloud will not just host them, but actively resell their solution to Google's own customer base, that is usually a catalyst for a multi-day runner. We saw the news, we saw the initial pop, and now we are seeing the fade. Why? This is classic sell the news behavior on the surface, but underneath it is a war over valuation. The market is skeptical. It is asking, okay, you have the partnership, but where is the revenue scaling? The drop to 2.79 is the market forcing Rezolve to prove that these press releases translate into hard dollars. It is a show-me market, and right now, RZLV is being put in the penalty box until the next earnings report confirms that the Google and Microsoft deals are generating cash flow, not just headlines. We have to address the elephant in the room, short selling. In the current market structure, stocks like RZLV are prime targets for short sellers. I want you to look closely at the borrow rates and the short interest data if you have access to a terminal. While the exact real-time short interest shifts daily, stocks in this price bracket with high news velocity often attract a mean reversion short strategy. Short sellers see the spike to the $3 or $4 range on news and immediately short it, betting that the retail hype will fade and the stock will drift back to its 52-week lows. If you are holding RZLV, you need to understand that you are fighting against algorithms that are programmed to profit from your impatience. The 4.78% drop we just witnessed, a significant portion of that could be short volume pressing the bid, trying to trigger stop losses below the 2.75 psychological level. If they break 2.75, they know a wave of retail stop-loss orders will hit the market, flushing the stock down to 2.5, where they can cover for a profit. This is not a conspiracy, it is market mechanics. Comment below how many shares of Rezolve.Ai you currently hold and at what price you got in. Are you underwater or holding from the lows? I want to see where the average entry price is for this community. Now let's go deeper into the reality of the financial picture. The company is in a high-growth, high-burn phase. The financials show negative net income, which is standard for this stage, but it scares the conservative money. The expectation from the bulls is that the J-curve of revenue is about to kick in. The reality is that until that cash burn stabilizes, any macro tremor, any rise in bond yields, any risk-off day in the NASDAQ will hit RZLV twice as hard as it hits a company like Microsoft. That is the beta risk you are taking. You are buying a call option on the future of retail AI, but you are paying for it with the volatility of a penny stock. The after-hours movement of plus 2.87% is interesting. Often, after-hours trading is dominated by lower volume, but a bounce like that after a red day suggests that someone, perhaps a smaller institution or a smart money whale, stepped in to accumulate shares while the retail crowd was logging off in frustration. It indicates that the 275-280 zone is being defended. If you look at the technical support levels, 270 is critical. If RZLV holds 270, the bullish thesis remains intact, framing this drop as a consolidation within a larger uptrend. If 270 breaks, the technical damage could invite a retest of the $2 level. Actionable insight for you right now. Monitor the volume. Today's volume was around 12.9 million shares. That's decent liquidity. If you see RZLV dropping on low volume, it's a drift. If you see it dropping on high volume, like 20 or 30 million shares, that is a liquidation break. Conversely, if we see a green day with volume spiking over 15 million, that is the signal that the short squeeze, or at least a short covering rally, is beginning. Watch the days to cover ratio. If it creeps up, it means the shorts are getting crowded, and any positive news catalyst, like a specific customer win from the Microsoft partnership, could ignite a violent move upward. Let's talk about the sector momentum. We are seeing a cooling off in the general AI hype. The market is no longer rewarding companies just for saying AI. It is rewarding application. This actually favors Rezolve. They are not selling a dream of artificial general intelligence in 10 years. They are selling a tool that helps a fashion retailer sell more jeans today. This distinction is vital. The expectation is that the AI bubble is bursting. The reality is that the AI infrastructure build-out is slowing, but the AI application layer is just getting started. RZLV is an application layer play. If the market rotates from hardware, chips, to software applications, RZLV stands to benefit significantly. There is also the narrative of the fail-to-deliver data. In stocks like this, you occasionally see spikes in FTDs, which happens when short sellers naked short a stock or liquidity providers fail to locate shares. I'm not saying that's happening definitively right now without the SEC report in front of me, but it is a common pattern in the sub-$5 SPAC-DESPAC world. If you see borrow fees spiking, if your broker tells you it costs 20% or 30% interest to short RZLV, that is a massive red flag for the bears and a green flag for the bulls because it means the supply of shares is drying up. Let's shift to the future outlook. What happens next?
We are moving into 2025. The guidance for revenue growth is aggressive. The company has forecasted meaningful revenue scaling. If they hit those numbers, this stock at 2.79 is a steal. If they miss, even by a little, the market will be unforgiving. The risk here is execution. Can they onboard the customers that Google and Microsoft are putting in front of them? It's one thing to have a referral, it's another to close the deal and integrate the software. The reality check for you is this: do not bet the farm on the partnership press release. Bet on the integration news. Look for case studies. Look for announcements that say Major Retail X is now live with BrainSuite. That is the validation point. Until then, you are trading sentiment. We also need to consider the broader macro environment. If the Fed keeps rates higher for longer, companies with no profit are penalized. If rates get cut in 2025, small caps like RZLV often lead the rally because their cost of capital drops and their future cash flows are valued higher.